When companies want to acquire more funds, they often approach investors for capital. Investors, however, will want to learn about the company before investing. This is where auditing comes in. For example, Juan runs a green energy company. He wants to purchase new sites for hydroelectricity production, which means he must reach out to investors for capital. To gain investors' confidence in his company's performance, Juan has an audit performed to confirm the validity of his organisation's reported financial statements. Auditing involves evaluating organisations' financial statements, systems, processes, projects and products based on established standards. While audits often focus on financial statements, they can also be non-financial in nature. Such audits can be performed to identify inefficiencies in an organisation. For example, the way that a shipping company processes orders and delivers them to another department could be audited to increase its efficiency. The main purpose of an audit is to ensure that a company's presented financial information is free from material misstatements and errors. Material misstatements are false or missing pieces of information that can affect decisions that stakeholders make regarding the company. Another important purpose of an audit is to provide an opinion on the effectiveness of operations and to recommend improvements to processes. Auditing can also encourage ethical behaviour among employees. If employees know that the organisation's financial records are consistently studied, they'll be less tempted to make deliberate errors or fraudulent claims. Finally, the regular auditing of an organisation helps ensure that it's in compliance with all applicable internal and external regulations. Auditing deals solely with the financial statements of an organisation. Auditing a business brings benefits to the organisation and to the public. Learning about these benefits can help you to understand why the auditing function is valuable and what you can expect from it. Auditing offers 6 benefits to your organisation and its owners. First, through auditing, you can assess employee efficiency. Second, you can also uncover and prevent fraud. Third, audits allow you to confidently use information. Fourth, by having your business audited, you can better identify risks to it. Fifth, in terms of business metrics, auditing enables you to determine the causes of fluctuations. And sixth, an audit of the company's financial statements is typically required in order to become listed on a national stock exchange. Select each benefit of auditing for the owners of an organisation to learn more about it. Auditors can focus on certain processes and systems to assess the efficiency of employees. You can use this knowledge to understand what effect employees are having on key metrics. For instance, an auditor studies output quantity trends for a manufacturing department and notices that output is decreasing. After further inspection, the auditor discovers that some employees haven't been adequately trained on new machinery. While uncovering fraud isn't necessarily the main objective of an audit, tracking errors can help you to identify whether any intentional misreporting or manipulation of financial data has taken place. An audit can help you to develop safeguards against future instances of fraud. Regular audits also act as a moral check for employees since they know that financial records are regularly assessed. This is another way that auditing can prevent fraud. For example, because an audit provides reliable information about your organisation's financial activities, you can use this information with confidence for planning purposes. This is because auditing checks statements for accuracy and the consistent use of approved accounting procedures. In the course of an audit, errors and misstatements are uncovered and future instances can be prevented. For example, audited financial records typically represent a clear and accurate assessment of an organisation's profit margins. This information can then be used to calculate more precise budget projections to gauge expansion plans because it's been deemed free of material misstatements. Auditing can help to identify the various risks facing your organisation, for example areas that may be particularly susceptible to errors or misstatements. Inefficient processes can also be identified as areas for improvement. The information produced by an audit can be used to develop new internal controls or hone existing ones to better mitigate these risks and inefficiencies. Consider that an audit of financial statements may give a clear picture of an organisation's profits. However, expected changes in the market may affect certain projections. By recognising this risk, an auditor can determine the potential change in market share as well as measures to be taken to soften the effects. Fluctuations in an organisation's key business metrics, such as production output or production costs, can be located in an audit. By examining the appropriate part of the business, auditors can identify causes for the fluctuations and suggest actions that can be taken. For instance, a manufacturer's output may have decreased. By examining the data surrounding the decline, an auditor may discover which part of the production line is responsible for the decrease. Overworked employees may be the cause, in which case the auditor can suggest placing more employees in this location. To be listed on a national stock exchange, companies are usually required by regulators to produce audited financial statements periodically, and at least annually. This gives investors confidence that the financial information they are using is free of errors, misstatements, and fraud. A mining company, for instance, wants to be listed on a national stock exchange. One of the conditions of this is that it has its financial statements audited. Remember Juan? In addition to the financial audit, he also commissioned an operational audit to identify any bottlenecks and potential risks that may hinder the company's success. This also benefited the other owners of the organisation. First of all, an auditor noticed that an important land acquisition had been taking longer than expected. After inquiring, the auditor learned that the employee responsible for the purchase wasn't familiar with a new regulation about land use for energy production, so he had been researching it before finishing the deal. The auditor recommended having a regulation specialist come in to bring the employee up to speed with the new rules. Further, since the company planned to expand and purchase more land, its owners could use the information to make projections for this growth. Similarly, the auditor pointed out that the green energy sector was growing fast, and so the company needed to be aware of competitors vying for similar land purchase agreements. The audit also revealed some approved expense reports that actually contained errors. Juan learned that some employees found the process for filing the reports confusing. By simplifying it, Juan made it more efficient and less susceptible to such errors in the future. Finally, since Juan's business needs to secure a good deal of funding to suit its expansion plans, the owners want to make a public offering of shares in the company. By having the organisation's financial records audited, the owners were fulfilling a requirement to be listed on the National Stock Exchange. How can your organisation benefit from auditing? When a company is audited, this brings a number of benefits to the public. First, creditors will have confidence in knowing the true financial position of the company. With an objective picture of the company, creditors are able to assess the risks of lending to it and judge the security of the loan on it. Second, auditing gives investors valuable information that helps evaluate the value of the company. This allows them to make an informed decision about whether to invest in the company, and it enables them to determine if the perceived gains outweigh the perceived risks. Audited information gives investors confidence that the financial information is in greater part free of errors, misstatements, and fraud. Having had its financial statements audited, Juan's company gives investors a report containing the information they wanted to review. After reviewing the information, the investors felt confident and excited about the opportunity of investing in Juan's company. The company is also able to get the loans it needs to purchase land to develop hydroelectric dams on before competing firms drive up the prices. In what ways does auditing benefit the public? Your organisation might conduct a number of different audits. The 4 types of audits are financial, operational, compliance, and statutory. Select each type. A financial audit is a comprehensive review of an organisation's financial records. The organisation's accounting practices may also be studied as another criterion of its financial credibility. The purpose of a financial audit is to find any inaccurate or missing pieces of information known as material misstatements. Once found, misstatements can be corrected and removed. A car dealership, for example, may conduct a financial audit to ensure. An operational audit examines the effectiveness of an organisation's internal systems. These might include a company's communication systems and production processes. Operational policies and how they meet organisational goals are also examined. Consider a company that manufactures T-shirts. An operational audit may reveal that one step of the process requires materials to be moved from one warehouse to another. Having both steps performed in the same location improves efficiency. An operational audit could also evaluate the manufacturer's delivery, billing and ordering processes. A compliance audit reviews if and to what degree an organisation observes regulatory guidelines. The nature of these guidelines varies with the type of organisation. For example, companies involved in the healthcare industry face very different regulations than those that develop computer software. Compliance audits also evaluate a company's security policies for monitoring access to sensitive information. This involves thoroughly checking which users have access to what information and how secure critical systems are. For example, an investment company has a compliance audit performed. Auditors ensure that only certain users have full access to the investors' portfolios. Auditors also check that the firm observes government regulations for trading procedures. A statutory audit serves the same purpose as a financial audit. That is, it ensures that the organisation is keeping fair and accurate financial records. The difference, however, is that a statutory audit is legally required. For this reason, statutory audits are conducted by external auditors. An insurance company, for example, may be required to have yearly statutory audits conducted. In these, an external auditor compiles an audit report according to certain standards of the organisation's financial records to ensure accurate records are being kept. Match examples of audits to the corresponding type of audit. In addition to the 4 types of audits discussed, there are 2 general categories of audits. These are internal audits and external audits. Select each category of audit. Internal audits mainly serve the needs of the organisation. While internal auditors are employees of the organisation, they perform a function that's independent from its other departments. Internal auditors may examine risks to the organisation and measures that are in place to deal with them. In this way, internal auditors play an important role in helping the organisation meet its business objectives. For example, an internal auditor may prepare a financial audit for the organisation to clarify its financial status. An internal auditor may also assess how the decision to use cheaper materials for a product may affect the organisation's reputation and profitability. External audits are performed by an independent body that isn't part of the organisation being audited. The focus of an external audit is usually on financial records. An external audit is often requested by an organisation's shareholders. The external audit report gives potential investors the information they need to make a decision about whether to invest or lend the company money, and this is why an impartial auditor is necessary. An external auditor may also perform an audit of the organisation's operations or compliance if the company doesn't have an appropriate department to deal with these needs. For example, if a company wants to make a public offering of its shares, it would likely order an external audit of its financial accounts. The audit report would be available for consultation to potential investors who want to have an objective opinion of its financial status before agreeing to buy into it. This would also be beneficial for current investors to assess the true position of the company. Consider a company that builds homes. Profits have fallen on several of its recent developments, and its board of directors decides to have an audit performed. The directors inform the company's independent auditors what they wish to learn. The board of directors thinks that fallen profits may be a result of construction delays, material costs, or potentially wasted materials. An operational audit is the type of audit best suited to the company's needs. The auditors can study the internal operations, such as the building process, purchase and delivery of materials, and how excess materials are used. Because the company has an independent audit function, it can be done internally. Shareholders of a global bicycle manufacturer are asking. Auditing involves evaluating aspects of an organisation according to established standards. Audits are intended to review organisations for errors, efficiency and compliance with regulations. From an organisation's point of view, auditing allows management to assess employee efficiency, uncover and even prevent fraudulent behaviour, and produce reliable information that can be used for future planning. Audits are useful for identifying and addressing risks to the organisation, attributing fluctuations in metrics to causes, and are usually required to be listed on a national stock exchange. Investors and creditors benefit from auditing by gaining reliable information on which to base their decisions about whether to become financially involved with the organisation. There are 4 types of audits. Financial audits examine the financial statements of an organisation. Operational audits evaluate the internal systems. Compliance audits ensure the business acts in accordance with regulations. Statutory audits are legally required reviews of an organisation's financial records. Audits can be performed internally or externally. Auditors can be external, that is, they're not employed by the organisation being audited, but instead contracted to complete the audit. They can also be internal, meaning they're employed by the organisation to fulfil its auditing requirements. Whether internal or external, however, the auditor must have an independent perspective and retain the authority to act independently within the organisation's structure. Together, these qualities allow the auditor to act impartially and objectively to fulfil the needs of the organisation. This independent mental attitude is emphasised by the standards of the American Institute of Certified Public Accountants, AICPA, a US organisation. Other countries have equivalent standards that regulate auditing practices. These reflect the qualities and skills that auditors need to have. First, auditors require adequate technical training and proficiency. Second, independence in all matters must be maintained throughout the assignment. And third, due professional care must be exercised throughout the auditing process. Select each standard An audit must be performed by someone who has adequate technical training and proficiency as an auditor. The auditor must remain independent throughout the assignment and avoid favouritism or biased reporting. Because the auditor's function is intended to add value to the organisation by reporting objectively, the auditor must be as creditworthy as possible and disconnected from other departments. Auditors must exercise due professional care when performing the audit and preparing the report. They should do everything possible to ensure they don't make mistakes or miss any important data. If audits aren't carefully completed, certain risks may be overlooked, leaving the company exposed. For example, Rahul is auditing the operations of a soda bottling facility to identify areas where improvements can be made. Since Rahul doesn't have a strong technical background in the facility's operations, he consults an engineer familiar with the facility. During the audit, Rahul learns that one department is causing delays to the rest of the facility. The manager of this department is a personal acquaintance of Rahul. However, to remain independent throughout the operation, Rahul resists the temptation to give the manager forewarning about his findings. Instead, he includes his findings in the report. And while it's not possible for Rahul to review all of the data related to the operations being audited, he's careful to take the time to select an appropriate set of data. It takes time, but Rahul ultimately shows due professional care in selecting enough varied information to get an accurate representation of the operations. External auditors need to be independent from their subject, while internal auditors can assume a more involved role. Is this statement true or false? There are 4 essential qualities that can help auditors meet the standards set out for them. In particular, auditors should be ethical, skeptical, be able to communicate effectively, and have strong interpersonal skills. Auditors need to be ethical and report any irregularities. Depending on the scale of the irregularities, it may be tempting to ignore or delay acting on them, since this can require a lot of work or embarrass certain individuals in the organisation. However, this temptation should be resisted, since giving in to them could compromise the integrity of the. In order to be effective, it's important that auditors be skeptical, taking nothing for granted, and fully explore every avenue of their subject. To be effective, auditors need to communicate effectively in order to develop a sense of mutual understanding with employees involved in the audit. This is especially important given the range of people across an organisation that auditors engage with. While a standard of auditing is to remain independent over the course of the audit, understanding through communication is essential. Strong interpersonal skills can help auditors to consult others effectively and access information they need. In order to be accurate and show due professional care, auditors need to collect information from different parts of the organisation. Interpersonal skills can make this easier. For example, Sarah is reviewing the financial records of her company. While conducting the audit, she discovers many inconsistencies are linked to one of the longest-serving directors of the company. Though she worries that her report could lead to his termination, she fully discloses the errors, since avoiding them would compromise the company. Sarah also decides that the inconsistencies she discovered in the director's work warranted a closer look at his records. Being skeptical that the misstatements may not exist in isolation allows Sarah to uncover a number of similar inconsistencies, which she includes in her report. As part of her audit, Sarah meets with the employees from different departments to discuss an internal control. Because the employees don't have a background in finance, Sarah uses language they can easily understand, and she's able to get the information she needs from them about the controls. Auditors need to allow themselves to err on the side of skepticism. Since you're now familiar with the qualities of an auditor, you now have the opportunity to observe them in action. Helga is an internal auditor for an international retail clothing company. Currently, she's reviewing some of the company's transactions with its suppliers. Observe Helga as she encounters something troubling and take note of how she handles it while upholding the qualities expected of her as an auditor. Follow along as Helga discusses the audit with William, the sales operations manager.
Something up?
We need to talk about some things I've noticed.
Sure. Like what?
Well, look at this. 445 rain jackets were ordered in January, but the shipping invoice was signed off for 405, and we still paid for 445.
That's odd. What do you think happened?
Could be someone being careless, or could be internal theft.
You're kidding, right?
Look, I know this is awkward, but I've noticed mistakes like this on other shipments. Do you think someone could be purposely approving short deliveries?
On purpose? Our guys? I can't believe they would do anything like that.
This isn't personal, William. An audit is all about numbers adding up. And I know it can be tricky when it involves people you work with.
Tricky? I'm shell-shocked. Still, you're right. These shortfalls are troubling.
Well, that's why we're doing the audit. Let's take a closer look at these figures before we do anything.
Helga commits to being ethical by asking William about the discrepancy, even if it is awkward. By being sceptical of the notion that carelessness is to blame, she makes sure that all possibilities are examined. Finally, by understanding that her questioning may be difficult for William and explaining her reasoning, Helga demonstrates her strong communication and interpersonal skills. These qualities help Helga to ensure that she adheres to the standards for auditing and performs a valuable service for her organisation. Now you'll have a chance to apply what you've learnt in this topic to the following situation. Julie is an auditor for a leading financial institution. She's performing a compliance audit of the mortgage department to ensure that all new mortgages are being issued in accordance with existing regulations. While examining the year's loan applications, Julie finds several mortgages that were approved even though the customer's credit didn't seem to warrant it. Which actions reflect that Julie has the right qualities as an auditor? Later, Julie meets with Matt, an executive from the mortgage department, to discuss the questionable loans that have been approved. Which of Julie's actions reflect the right qualities for an auditor? Auditors are expected to adhere to various standards. These state that auditors must have adequate technical training and proficiency in the field. They must remain independent in all their auditing actions. Auditors must also ensure they exercise due professional care over the course of an audit. Certain qualities help to ensure that auditors meet these standards. Auditors need to be ethical, even when this is difficult to do. They should be skeptical in their interpretations of data so that every possibility is considered. Finally, auditors need to have strong communication and interpersonal skills to facilitate the audit, which involves many different people and levels of the organisation.